Hi, Assalamualaikum. My name is Muhammad FADHLI bin Abdullah, and now I will present the overall market performance of FPM KLCI from the 2018 to 2020. The FBM KLCI show a major downtrend from the 2018 until the early of 2020, especially during the 2020 market crash. The benchmark of FBM KLCI in 2018 ended up losing 5.91% to end at 1,690.58 points due to the political changes on the domestic front and also the rising of US interest rates and also the China trade tension. While in 2019, KLCI was down for 6.02% or 101.82 points and making it the worst performing stock market on that year. The KLCI market capitalization was reduced to 1.4 trillion ringgit Malaysia. The KLCI started its sharp fall on March 11, 2020, down to low of 1,219.72 points due to the movement control order took effect. This was happened during the coronavirus crash, which are causes of the 2020 stock market crash. But at the end of the 2020, FBN KLCI closed at the 2020 all-time high of 1,684.58 points on the last day of trading, helped by the banking stocks amid the window dressing period.
A stock market index is a single number calculated from the prices of many different stocks. Technology stock index consists of companies that related to technological manufacturer or software or any tech involved. For long term, the technology index moved sideways range 28 points to 42 points from 2018 until early 2020. For short term, during stock market crash in 2020, technology index also affected, which heavily down 13.65 points or negative 36.56%. For intermediate term, the index rebound at 23.5 points after the heavy fall and after breaks the resistance at 42 points. The index continued upward throughout the year and closed at 69.72 points. For the catalyst, the upward movement are supported by the catalyst from Nasdaq 100 technology sector index movement.
Okay, next I will explain about the construction sector index. Based on this chart, we can see the major downtrend start from year 2018 to 2020. This downtrend is because of Pakatan Harapan rules, which is changes, delay and cancellation of some mega infrastructure projects. And year 2020, the market crashed. There are a sideways movement from April 2019, which show accumulation phase but failed and dropped more for 92.48 points during the year 2020. And there have a rebound hopes, which is in November 2020. The price make a breakout from the major downtrend line, and maybe it's indicate for reversal in the price movement for the year 2021.
Now I would like to present about the first company under the technology sector that we have choose, which are the Malaysian Pacific Industry Berhad or MPI. MPI is an investment company that are involved in the manufacture, assembling and testing and also sales of integrated circuits such as the semiconductor devices, electric component and also lead frame to the customer around the world. The company segment are in the Asia, in the United States of America and also in the Europe. The company subsidiaries Dynacraft Industries Sdn Bhd is a manufacturer of lead frame. It design, manufacture and supplies microelectronic packaging system. For the revenue of the company in 2018, the company made 1.542 billion, and in 2019, the company made the revenue of 1.487 billion and 1.564 billion in the 2020. The growth of 5% in the financial 2020 compared to the 2019 are because of the market alignment arise from the trade conflict. However, this has benefit the company operation in China, resulting in significant revenue increase as a result of the increase in sourcing supply within the China. The company return on equity in 2018, 2019, and 2020 is 8.4%, 8.5%, and 9.4% respectively. The ROE for the first 2 years are quite same, but increasing in 2020 because of the higher revenue generated by the company. This shows that the company are well managing their shareholder capital. The return on asset of the company, meanwhile, in 2018, 2019, and 2020 is 8.4%, 7.5%, and 7.5% respectively. The ROE fall in 2019 and 2020 may be because of the company might had over-invested in assets that fail to produce the revenue growth to the company. For the technical analysis of the MPI chart, the closing price of the MPI shares on the last day trading of 2020 at the 24 ringgit and 86 cents. The price have made a strong uptrend from the March 2020 after the 2020 stock crash market, and go up about 15 ringgit from the 10 ringgit of price in the March 2020. The support of the current price are at the 23 ringgit and 60 cent, and the resistance that have to reach by the MPI price are 25 ringgit and 96 cents. In my opinion, if for the new investor that want to buy this stock, they can reconsider to make an entry, since the MACD indicator have showed the buy signal when the MACD line, the blue line, have crossed above the signal line, and also both lines are at the above of the histogram chart at the MACD, and it show a good entry for the new investor that want to invest in the MPI stocks. The company outlook and prospect for the future project are expected from the 5G business that are expected to fuel the future growth for the company. The increasing usage of automotive electronics, MEMS sensor that are designed into the electric vehicle and also HEV, and also in the safety system, also give the company a bright future in making the company grows. There will also be an increase in the adoption of the IoT devices due to the increase of the connectivity, such as for the electric vehicle and also with the smartphone, and this will increase the adoption of IoT. Apart from smartphone, the demand from the wearables also is expected to fuel the growth of OSAT market as they become an integral part.
Okay, next we move to the next company, which is Inari Emerton Berhad. Let me explain first the company background. Inari Emerton Berhad is an investment holding company with wholly owned subsidiaries involved in the OSAT and EMS industries. Inari Emerton Berhad currently has 14 wholly owned direct subsidiaries, which are Inari Technology Sedan Berhad, Inari Semiconductor Lab Sedan Berhad, Inari Integrated Systems Sedan Berhad, and the others. Okay, next we take a look to the revenue for Inari. Okay, we can see from the bar chart shows the declining numbers of revenue from year 2018 to 2020, which is from 1.376 billion ringgit Malaysia to 1.058 billion ringgit Malaysia. This for the year 2020, it start decrease. The revenue is decreasing because due to the lower sales volume in optoelectronic products in January and February, and also the lower production volume at our Malaysia, China, Philippine plants in the current quarter as the result of the enforcement of lockdowns to contain COVID-19 by the respective government. And for year 2018, there are the highest number of revenue is due to the involvement and technological advancement of smartphone over the past few years that helped to boost the earning of the group, which provide outsourced semiconductor assembly and test service. Okay, then we move to the ROE, return on equity. There also shows the declining number of percentage from year 2018 to 2020, which are from 24.3% to 12.9%. It keeps decreasing every year, and the net profit in 2018 is the highest compared to 2019 and 2020. Okay, then we move to the ROA, return on asset. There also shows the decreasing or the declining number of percentage from year 2018 to 2020, which is from 18.90% to the 14.79%. And from year 2018 to 2020, there are increasing in the number total asset, which is from 1.33 billion ringgit Malaysia to 1.46 billion ringgit Malaysia. Okay, next we move to the outlook and prospect. Okay, looking forward to year 2021, moving ahead, the group will continue to expand the production capacity and invest in waterfront end assembly and test technologies to make improvement to drive better revenues and profitability. And for the year 2021, this Inari Emerton Berhad have budgeted around RM100 million ringgit Malaysia in capital expenditure for a new and improved production equipment and facilities. Okay, we are done with the fundamental analysis. Now we take a look to the technical analysis. Okay, based on this chart, I'm using two indicators, which are moving average and MACD indicators. So the support is at 3.08, and the first resistance is 3.25, and resistance 2 is at 3.5. Okay, based on the moving average indicators, the buy signals are shown on 15 June 2020, and the sell signals is on 31st May 2021. Okay, moreover, based on the MACD indicators, the buy signal are shown on 11 January 2020, and the sell signal is on 15 March 2021. Okay, for now, I'm not suggest to the potential investor to buy this Inari Emerton Berhad, we can buy it when the buy signals show up in the future.
MMC Corporation Berhad is Malaysian-based company. MMC Corp is a major utilities and infrastructure corporation operating in Malaysia and overseas across 4 divisions. The first one is Ports and Logistics, second one is Energy and Utility, third is Engineering, and the last one is Industrial Development. They also operate one of the largest Malaysia's container port terminal and provide logistic services. They are listed on the main market and was listed on Bursa Malaysia on 12 July 1977. In 2020, MMC posted a revenue of 4.49 billion, 4.7% lower year-on-year compared to 2019, which is 4.71 billion. Despite the tremendous decline in operating pace in 2020, MMC has continued to be resilient. By focusing on operational efficiency, stringent cost management, and optimizing productivity, the group has posted stronger earnings during the financial year, despite a slight revenue decline. In 2019, MMC registered a stable revenue performance of 4.71 billion, comparable to the previous year's 4.98 billion. The group's revenue performance was consistent with the tough operating environment experienced in 2019. There was lower revenue recognition from several key projects, notably the Klang Valley Mass Rapid Transit Sungai Buloh Serdang Putrajaya. Despite the marginal 5% decline in revenue, MMC has registered stronger earnings in 2019. The Ports and Logistics division remained the largest contributor to the group's revenue. For the financial year ended 31 December 2018, MMC Group's revenue grew 20% to 4.98 billion from 4.16 billion a year earlier. Once again, Ports and Logistics remained the key driver of growth for the year, with the division accounting for 60% of MMC Group's revenue, supported by steady volume growth and gain realized from their acquisition of new ports. In 2020, the return on equity is 3.9%. At the H Billion Ringgit Cloud Corporate Award 2020, the operating firm received recognition for highest return on equity over 3 years. Net profit in 2020 is 445.844 million. One of the reasons of why the net profit has increased a lot is Port of Tanjung Pelepas improved its profit before tax and profit after tax by 48% and 69% respectively. In 2019, the return on equity is 2.7%. The net profit is 300.410 million. One of the factors for the increasing in net profit compared to 2018, MMC will develop a systematic system to delivering greater efficiency and productivity at their ports. In 2018, the return on equity is 2.3%. The net profit is 267.037 million. One of the main contributors for their net profit is MMC accelerated work progress at the MRT line and Langat sewage project, also supported by higher volume passing through their ports. In 2020, the return on asset is 1.71%. The total assets are 26.11 billion. Assets continue to far exceed liabilities and the groups maintain sufficient cash to meet working capital requirements. In 2019, the return on asset is 1.14%. The total assets are 26.45 billion. Despite a decline in property, plant and equipment, intangible asset and deferred tax asset, total asset growth was driven by an increase in investment property and right-of-use assets arising from the adoption of Malaysian Financial Reporting Standard 16 (MFRS 16), with the latter contributing 2.09 billion. In 2018, the return on asset is 1.10%. The total assets are 25.30 billion. They succeed to maintain the ROA, but there is no significant improvement compared to last year. On 19 July 2021, MMC Corp share price is RM1.75. The resistance is at RM1.85 and the support is at RM1.61. From February 2018 to July 2021, it shows a downtrend line. In 2018 until January 2019, the price dropped steadily from RM2.29 to 82 cents. After the market crash in March 2020, the share price has increased steadily and shows an uptrend line. It keeps create a new high. On March 2021, the MA has crossed the shorter moving average MA20 crosses above the longer moving average, which is MA50. So it indicates a buy signal. Also on July 2021, the RSI crossed above the oversold line, which is 30%, to indicate a buy signal. The recommendation is to buy MMC stock because the RSI indicator indicates a buy signal. Furthermore, with the current vaccination rate, the economy will slowly recover, and one of the sectors that will rise is construction. While operating conditions are expected to remain challenging, financial year 2021 is expected to be a recovery year for the global economy, with positive forecast of 5.5% for global gross domestic product growth predicted. With this, MMC maintained a positive outlook for financial year 2021. Its port operations have remained robust during a severe economic downturn and will benefit from the pickup in trade and commerce across the world. The various cost and operational efficiency realized in financial year 2020 will hold MMC's port in stronger stead to be more competitive and resilient going forward. The continued expansion of Gas Malaysia Berhad's gas distribution pipeline network will enable it to secure more customers going forward. New business ventures in combined heat and power as well as virtual pipeline will enable diversification of revenue stream. The group's engineering division will focus on completing its project in hand and delivering on its order book of project, which is anchored by the KV MRT Putrajaya line.
Gabuna Berhad. Gabuna Berhad is a Malaysian-based company that are involved in the construction, engineering, infrastructure concession, and also a lifestyle asset and township construction. For Gamuda revenue in 2020, a decrease of 5% year-on-year compared with 7,181 million revenues achieved in 2019. Core net profit of 520 million exclude one-off non-cash impairment of 148 million on IPS asset was 26% lower compared with last year 700 million. For 2019, the revenue of 7,181 million for the current financial year compared with 7,153 million last year. The core net profit was lower at 706 million, a 15% drop compared with last year 835 million, mainly due to the disposal of its 40% owned water concessionaire Syarikat Pengeluar Air Selangor Sdn Bhd Splash. In 2018, the company recorded a revenue of 7,169 million, an increase of 26% year-on-year compared with 5,703 million last year. Net profit is lower at 540 million, a decrease 15% of year-on-year due to one-off loss on disposal of Selangor Pengeluar Air Selangor Sdn Bhd and the 300 million on impairment on investment in Gamuda Water Sdn Bhd. Excluding this year one-off loss and last year one-off loss on investment in Smart of 98 million. Better growth in revenue and core profit derived mainly from higher property sales of its overseas project in Vietnam and Singapore. The return equity of the company 6.1% in 2018 and 9% increased 9% in 2019 and increased 11% in 2020. The company increasing throughout the years. The lowest net profit in 3-year period is in 2020, which are 372 million, and the highest in 3-year period is in 2019, which are 700 million. In 2020, there is an increase of 6% in equity. The company return on asset in 2020 to 2019 and 2018 is 2.0%, 4.07% and 3.113% respectively. The total asset is steadily increased from 2018 to 2020 from 16.839 billion to 18.528 billion. For the Gamuda future, Gamuda have shown a new interest toward the high speed rail project, HSR project. And they also have a property division that expanded to a digital technology during the MCO to react broader potential customer. Gamuda also has started to implement a new engineering innovation by accelerating the digitalization efforts in underground and tunnel construction. For the technical analysis of the Gamuda Berhad, on 19 July 2021, the Gamuda share price is at RM2.84. The resistance is at RM3.01 and the support is at RM2.76. In a three-year period, the MMC Corp shows a downtrend line. The share price pretty much stagnant. In 2018, the share price dropped from RM5.20 to RM1.99. In March 2020, when the market crashed, Gamuda is also affected. But in April and May 2020, it rebounds and after that it pretty much stagnant. From March 2020 until December 2020, it shows a trend line, but in January 2021, it breaks below the uptrend line and the price keep dropping until July 2021. In July 2021, it slowly picked up a momentum to push the price as the RSI indicator show, but it does not signal a strong buy signal, and it is still a long way to increase the price.